Welcome participants to this webinar. Very pleased to have a great panel with me today. So my name is Sebastian De Paula. I'm a partner at PwC, and I'll be moderating the panel. And I'll be introducing our panel in just a moment. Just before I do that, a couple of words of introduction about how this is going to work, also for you as the participants. So we've got really an action-packed program for you over the next hour on getting to grips with ESG-linked FX. If you want to post any questions, you can do that. If you look at the panel on the right, you've got a tab called questions. So that's what you should use if you've got questions for us. So just for you as participants, we can't hear you, but you can post questions through the chat. And I mean, we've got plenty to discuss, but we'll be making an effort to have a look at the questions that come through there. So do post your questions under the questions tab, not the chat tab. So maybe then a couple of words first on the background to this. So this webinar is part of the award-winning Economist Global Treasury Leaders Program series, which is supported by Deutsche Bank and obviously organized by The Economist. The purpose of this is to share insights and to connect treasurers around the world with expertly curated activities throughout the year, which includes summits in different regions, different parts of the world, as well as webinars, white papers, interviews, and generally an online community. So if you want to join the online community, which obviously we'd encourage you to do, you've just had appeared just now in the chat a link. So just go into that, use that link, and make sure you select Global Treasury Leaders Network in order to be able to join this community. So you can do that again via the link that is now in the chat. So that's by way of introduction. Now, what we're going to do, and I'm very pleased to have our panel with us. So, just to introduce them, but then they're going to tell you a little bit more themselves in a moment. We have Fabio Casinelli, who is head of Group Treasury at NL. We have Jérémy Hamon, who is head of Group Finance at Primetal Technologies. And we have Claire Kuster, who's Global Head of ESG, Fixed Income and Currencies at Deutsche Bank. So a fantastic group to entertain you on a subject which I think is probably relatively new for many of you. So it's great to have the opportunity to explore it. What we're going to do is I'll get the panelists to introduce themselves in a minute, and as well as their companies. And then we'll say a few words about their hedging strategies, take a little bit of time to just, have the background on how their hedging strategies work. Then we'll talk a little bit about the company's ESG programs. So not specific for treasury or for hedging, but the overall ESG programs, because this is very relevant as background. And then we'll dive into the real meaty subject, which is the ESG-linked FX programs. And then we'll have a few words of conclusion. And as I said, I'll be keeping an eye on the questions that you send through via the questions tab. So with that, let's get our panel to introduce themselves. So Fabio, do you want to kick us off?
Hello, everybody. My name is Fabio Casinelli. As responsible of the Group Treasury, we manage the short-term financing. We also follow the FX risk, the liquidity risk. We manage the guarantee and also the credit line of the group. What about Enel? Enel is an utility present in 32 countries, more than 70 million customers, around 18 billion of EBITDA, with a net debt of more than 50 billion. 50% of this debt is already sustainable, linked to our strategy. About FX, we could say that we manage 60 billion euro on a yearly basis in more than 30 countries. That's our team.
Great, Fabio. Thank you very much. So it's great to have you with us. Jérémy, do you want to go next?
Yes, thanks a lot, Sebastian. So my name is Jérémy Hamon. I'm the head of finance for the Primetal Technologies Group, so in charge of trade finance, treasury, insurance, and pensions for the group. Primetal, as such, so is a London-based company, but has around 60 locations around the world with 7,000 people, We are a steel engineering firm, so we build, develop, improve steel plants around the world. So our customer base are basically all the steel makers wherever they are in the world. We used to be a joint venture between Siemens and Mitsubishi Heavy Industry, and now since last year we're fully owned by our Japanese shareholder.
So you're fully part of Mitsubishi Group now.
Exactly, we're a full subsidiary of within the Mitsubishi Heavy Industry Group, so one of the Japanese Zaibatsu, so traditional Japanese corporate.
Okay, great. And that maybe already gives us a little hint as to why we're going to be talking about ESG-linked FX later on, as opposed to ESG-linked debt, for instance. But we'll save that for later. Last but by no means least, Claire, would you like to introduce yourself?
Yeah, hi, good afternoon, everyone. Claire Bustar. I'm Global Head of our ESG and Sustainable Finance business at Deutsche Bank for our Fixed Income and Currencies division. I'll just speak a little bit about our FX capabilities. We are the #1 on the street in terms of our currencies offering. We have one of the leading platforms, Autobahn, which enables our clients to trade and access currencies online. And probably one thing to mention is Deutsche Bank really started as a German bank and really started in terms of businesses following our German client base in the offshore jurisdictions that they operated in, so across the emerging markets and following their supply chain and supply needs. And so in addition to our FX offering in the developed markets, we have a very deep and extensive penetration of FX capabilities, both onshore and offshore in the emerging markets across Latin America, CEMEA, and Asia.
Brilliant. Claire, thank you. Thank you very much. So excellent to have you all. So as we said, let's jump into our first topic, and I'm going to go around pretty much in the same order. Fabio, do you want to just tell us a little bit more about your FX hedging program? I know it's extremely sizable, so just to give us that background first of all. And feel free to, if you want to share anything also about how Treasury is organized, feel free, but let's focus mainly on FX.
Yes, with pleasure. We manage this 60 billion on a yearly basis with more than 20 banks, for sure, mainly also with Deutsche, that support us in this activity. It's something that we deliver with a centralized approach for the main part of our risk, but also with the help of our colleague locally that could provide us advice and a better representation of local needs and local techniques related to FX. We support our business colleagues. We consider the FX as a service because in reality, our colleague transfer us all the financial risk, including the FX, consenting them to be concentrated on their activity, so the business, the industrial aspect, and we manage for them all the exposure. So we continue to manage these following the single exigencies that could come, for example, from official tenders, increasing capital, dividend, procurement exposure. So it's absolutely diversified. It's something that we provide, trying to, as we said, to consent them to transfer us immediately this risk in order to avoid the dynamic of the market and the volatility of the market. As we said, being a service of our business colleague, we are totally linked to their exposure. That's why we consider ordinary the sustainable business as part of our activity and our approach. We clearly utilize all the market tools available as ordinary, but sometimes when the characteristic of the exercise requires specific approach, we are open and we utilize everything that the market could consent us to consider as available.
So Fabio, do we understand rightly then that the business makes the decision of when they have an exposure, but you have policies that basically say they must hedge with you whenever they have, I suppose, a committed exposure then?
Yes, they let me say, transfer us immediately. The concept to make it immediately means as soon as this risk becomes real. Giving you an example, when we participate to a tender, we develop with them the offer, the level necessary to qualify the risk, but only and when we will become the winner, they transfer us the risk, and we are available and we can intervene on the market in order to hedge the full risk, consenting to be absolutely net and hedged with respect of the under.
Understood. And so that means that so you help them with the pricing for the tender to take account of the FX component.
Yes.
But you wouldn't necessarily hedge at that point.
Yes, because for example, in this case, they need to qualify which could be the better procurement that sometimes is not only in euro, but could be in dollar, yen, other currency. So in order to compare the offers, we provide them all the necessary support in order to match and compare the possibility available on the market. Yeah.
And so, Fabio, what we're talking about now is really the flow hedging, right? I think you also have some hedging related to the debt side of the balance sheet.
Yes, for sure. Our risk, as we said, coming from daily business, like what we already mentioned, but also related to the management of our debt in other currencies. For sure, when we issue in dollars, pounds, or other currency, we immediately hedge our risk. In that case, the cross-currency swap that we utilize are part of our active management or the FX risk, but it's something with a totally different characteristic because it's more focused on single exercise for huge amount and long tenor. The ordinary activity is more concentrated on flow business with different deals on a daily basis. Giving you an idea, we close more or less 8,000 deals each year with different amount, but with tenor that could be within 1-2 weeks till 3 months, giving you the average of the exposure.
Yeah, and so we'll come back to this point about tenors because I think it's very relevant later on in the discussion as well. Great, Fabio, thank you so much. I think that gives people a good overview. Jeremy, do you want to go next? Tell us a little bit more about your FX hedging program.
With pleasure. So on our side, very close, I think, in terms of guidelines to what Fabio just explained. We're exclusively a project business. We have maintenance as well, but mostly mostly on the project side. Since we basically provide engineering and machinery from different locations to customers based in other locations, every single project bears foreign currency risk one way or another. On the selling side, the supply chain side, and similar in every project, in every tender, we provide FX pricing, include that in our offers, and hedge accordingly when the project or when the binding offer becomes an actual risk. At the moment, we hedge around over 25 currency pairs. It's always evolving based on our customer base. Large capital investments in steel making are really local market driven. Still, at the end of the day, it's really a local market. So whether our customers are in Mexico, in Vietnam, in Russia, in Turkey, of course, our currency pairs will evolve accordingly from one year to another. We have this 100% hedging strategy. So similar to Henel, we use forwards and swaps. So our tenors usually they cover the full implementation time of a project, usually up to 3 years, slightly above from time to time on long-term maintenance contracts. FX swaps, of course, in total for around 7 billion euro outright, but as well FX options, around 100 FX option or FX option structure per year, 4,000 FX deals. Options, actually, we use them mostly for headquarter items, balance sheet hedging, depending on the situation, especially on intercompany financing, or typical in our hedging strategy for projects that are loss-making from the moment we sign them because our binding offer didn't have a sufficient buffer. So, we base our buffer on implied volatility, but at the end of the day, it may not be enough. And when we sign the order, we may be in a loss situation. And in this case, we may go for an option structure that can give us sometimes a bit more flexibility compared to booking the loss that we would get by just going with forwards right away. This is pretty much a little bit the difference, but in a sense, really 100% FX hedging strategy based on outright with a few banks overall.
So similar to Fabio, that you're really hedging basically
yes,
the firm
completely.
commitments, and so I understand you don't hedge the tender stage either.
Depending on our level of, we may hedge with optionality at this point in time, depending on really our level of security. If we're the only bidder and we're pretty sure we're going to have this and we expect strong movement in certain currency, we may hedge before, but of course this needs top management approval because we may end up in a risk. So it's more the exception than the rule, but the hedging has to be done on the day the FX risk is actually contracted, similar to Fabio in this case completely.
Yeah, got you. Okay, very good. I think this is helpful because this gives the participants a sense of, okay, what do your FX hedging programs look like? Okay. They're both sizable, and you both, make use of a variety of instruments, mainly forwards, but also options. I don't know, Claire, is there anything you want to add to this part? You were going to get you to say a lot more on the ESG side, but is there anything you want to add in terms of what you're seeing with other clients?
Maybe I can actually just put a little bit of perspective on how we look at the FX business, because I think one part of it is kind of what I would classify as the sort of monster flow machine that is FX. And there, a lot of our focus is on, I would say, two kind of key work streams to ensure that we're always, servicing our clients to the highest quality. One is ensuring that we're constantly ahead on the innovation and tech side in terms of the back-end execution to make sure, the pricing and all of that is done in a very timely manner. Because as we know with FX, even a second on execution can mean a big difference in terms of price. And then the other part of that kind of flow aspect is the seamlessness of our execution. And this is especially true when we're dealing, in some of the emerging market countries that have capital controls or quasi-capital controls where you might need onshore licensing. For example, in China, where we have an onshore license, we're able to provide that seamless execution of onshore delivery, but enable the client to deal with just one Deutsche Bank entity. So we handle all the back-to-back internally, and that requires a lot of pipes and setup, that relieves our clients of having to do that themselves, or the timing delays that might correspond to. And then the other aspect of our business is what I would call the sort of more structured solutions aspects. And there, I think there's some relevance to the topic today in terms of ESG and sustainability. We're finding more and more use of things like deal contingent hedging in the sustainable space, especially when we have our clients transacting and engaging in, for example, renewable projects where they might be putting a price on that contract, but it's got FX hedging and they don't know whether they're going to win it or not. They want to put in that deal contingent hedge in place to make sure the economics and the equity return doesn't get deteriorated. So we've seen that and offered that in a number of jurisdictions for our clients. We've also offered some tailored products on FX, including a pay-as-you-go FX hedge solution for our client who had a long period of reduced cash flow because of certain construction aspects, and they didn't have the funding to pay for the hedge day one. So we tailored a pay-as-you-go solutions for them. So these are some of the things that, some of the innovations that we're doing in the FX space to ensure that our clients are serviced in the way they need to be serviced. And increasingly, we see a sustainability angle, less from the ESG KPI perspective, but more from the actual source and need of the hedge. And, one other thing to mention is that we also closed the first green hedge this year. When I say green hedge, it was a hedge that we provided for a renewable platform provider in India. And it was on the back of a financing, a green bond financing that they did, and we got a confirmation from Cicero who's one of the leading ESG rating service provider, that that hedge was in fact green. And our aim here is really to continue to develop tools and technologies on the sustainable FX and rates space that enables mobilization of capital flow. So here, really, what we were trying to do is establish a market for green counterparty credit risk, as we see more and more of our institutional clients looking to invest in green credit exposure.
Makes sense. So innovation, I mean, lots of innovation there, and both on the product side as well as, obviously, as you started with, on the technology side, which, as we know, in FX is important, right? Because the margins are thin, but also very good. And we're looking forward to hear more as we go through the discussion around some of the innovation on the ESG-linked products. Very good. Thanks, Claire. So let's now dive in, and maybe this time, well, I'll again start with Fabio, but we're going to dive in now to the ESG side of things from a corporate perspective. So not specifically treasury, a little bit more about your company's ESG program. So Fabio, do you want to start off with NL's ESG program? Obviously, in your industry, this is super important.
For sure. Okay. Our journey on sustainability started more or less 4 years ago. Was a moment in which we start to understand that our communication in terms of sustainability and strategy need to be harmonized. We started linking in a single presentation the ordinary economic and financial figures with the sustainable and the innovative part, because we recognize that treating on a single basis, the investor doesn't understand the real effort and the real quality of our strategy. So we jointly immediately. After this step, we recognize that the energy transition that we are trying to deliver need to be also available for the financial tools. So the step was related to the fact to try to consent to the investor to recognize the relevance of the strategy and the commitment that we assume in the communication versus our target, with the tools that in financial activity we need to utilize. So the simple way that we recognize to try to link the two exercises is to create for each tool in finance a link with our KPI or yearly basis communicated in our business plan that, for example, for 2021, as reference the renewable installed capacity with certain threshold, 55%. For 2022, the same threshold, so the renewable installed capacity, but with 60% of threshold. For the following years, something that continue, for example, also to be linked to our CO2 emission, in order to be focused and with respect also the United Nations target that we recognize that we insert in our description of our business. So it's something absolutely that coming from the past, but continue to have a trend, a constant trend in our activity. Making this in 2019, we delivered our first exercise in the capital market with a dollar bond link to this kind of KPI. Immediately following, we deliver other exercise in euro. And so starting with the capital market, in the following months, we qualify other exercise like term loan, revolving credit facility. We define also the update of our commercial paper program that is absolutely relevant, in particular for asset management, in order to have some tools available on the sustainability on the short term. Because in this moment, for example, the capital market could guarantee sufficient tools to invest. Contrary on the short term, it is not so easy. So to update the commercial paper program also in this way, consent them to have an easier approach versus this kind of tool. Over this, recently, we define also our link also about the activity of the guarantee with different counterparty. And not the last but not least, we qualify this exercise also on the FX. We think that that's the correct approach because one by one, we are showing that our commitment is an holistic approach that combine strategy and finance in the same way in order to deliver not only the energy transition, but also the transition of the finance to accompany and to be aligned with the business dynamic and the future of the world.
Thanks, Fabio. That makes complete sense. And so just to go back to the, not focusing so much on the FX for the moment, but just on the borrowing activity. You mentioned bilateral CP guarantees, bonds that are all ESG linked, that are linked, and are those linked to your that you mentioned the percentage of your production that is coming from renewables, right? That's your main KPI. Is that right?
Yes, the KPI for 2021 and 2022 is the renewable installed capacity, the percentage as a target of our commitment and of our delivery. For 2023, we start to have the CO2 production.
Okay.
And on a yearly basis, we propose a new one in order to have a target that could be align with the structure and the tenor of each exercise, because the two that we already mentioned are on the short term and could be available for the FX exercise, guarantee, and so on, for treasury tools, let me say. For capital market, when we issue something that is longer, for sure, than 2 or 3 years, we try to find a threshold and KPI that could be more aligned on the real tenor of the single tool.
Right, and that's hence the relevance of what we said earlier about the tenors. So what sort of, just to get a sense, I mean, are you able to tell us what sort of proportion of the debt side of your, of the liabilities side, including short term and long term, what sort of proportion is linked to these KPIs?
Yes, the main part of our sustainable or better linked debt is on the capital market. Giving you an idea, we have outstanding 14.5 billion of bonds, sustainable link available on the market. We have 3.3 billion of loans. We have 14 billion of revolving credit line, and 14 billion of commercial paper program available on 3 different countries as the same related and link to our sustainable activity. So all of these are SDG linked exercise that are fully available for the investors.
Fantastic. And as you said, fully aligned in time and fully aligned strategically then with the KPIs of the company is basically.
One by one, okay, in order to be coherent with the interest of the investors. Yeah.
Fantastic. Very clear. So maybe then let's jump to Jeremy. Do you want to tell us a little bit then about Primetal's, let's say, ESG program more generally, and so not specifically treasury?
Yeah, that's good. Absolutely. I mean, on our side, ESG is rather new to us. I'll come to that in a minute. I mean, ESG in general and is new for a lot of corporates. Even if Enel, as Fabio explained 4 years ago, was already a pioneer at that point in time. So as explained, we are a subsidiary in a much larger listed groups, and we operate an in-house bank with that group. On our side, Primetal, we had KPIs as part of our standard corporate and social responsibility matrix. And we were delivering data to our shareholders, saying this is the technology that we've built this could be showcased in this documents available to public investors, showing what we're doing. How do we manage, let's say, byproducts in the steel market? How do we help reducing CO2 or any other kind of emission with a new technology? But we do not have in this CSR deliverables an actual measurability constraint, if I can call it like that. So sure, we develop technology, but how this technology changing things? You know, how much, in terms of emission, what does it represent? Does it help the market from transitioning? So, you know, we didn't have that. And we are a subsidiary actually in a large company, so we centralize cash, but the access to capital markets that Fabio just explained for NL for me is done out of Japan. So yes, of course, we started from Japan to do green bonds a year and a half ago, as well on our mostly linked to our capacity on the Mitsubishi heavy industry side to develop renewable energy, to build them and deliver them to energy producers like NL. But in the steel market, which is still one of the most polluting industry, with close to 10% of global emissions, and we're not just talking about carbons, but emissions or byproduct management. The technology that we provide to steel makers is market changing. It's market transitioning. And on the other side, the ESG products are mostly, or were mostly in the past, as Fabio as well explained well, to lending products and not to older corporate banking products. So we could not really show that impact. We could not showcase in saying, well, actually we do KPIs that are a lot more measurable, a lot more meaningful, because we're a subsidiary, part of a larger group, and we don't directly do the reporting ourselves. We don't ask investors to invest in our business. We are simply there and provide and improve the technology. So as well, this was really not really interesting for banks. That would be a question maybe for Claire afterwards on my side. What did push banks to go into these corporate banking products that do not call for external investor to come and invest? So on our side, really, we took it from this, other corporate banking product side. So in this sense, FX, which we will talk about in a minute in terms of how the program works. But I cannot really say that before we started this FX program, we had a meaningful and measurable ESG KPI framework in place. Sure, we were reporting, but at the moment, of course, since we audited externally on this KPI target, we have built something that's a lot more robust.
Fantastic. So I want to come back to some of that, but let's already get the dialogue going. Let's get Claire maybe to comment on your question. To Jeremy's question, what's brought you as a bank to start to develop these products that are not related to an investor that has an appetite for a green investment?
I guess we are the investor.
Right.
Look, I think there's the following dynamics happening. I think if you look at the financial industry as a whole, and probably especially the European banks, we have a very strong and forthright European agenda around sustainability. We have upcoming disclosures, whether you look at CSDR that's going to apply for our corporates, but if you look at what's coming down the pipes with the EBA in terms of the green asset ratio disclosures that are very much out there, in addition to our own commitments that we've made to the German government around how we are going to transition our balance sheet, i.e. our financed emissions and our facilitated emissions to be in line with the targets of net zero and where the EU is heading. So I think that's the big picture macro of what's happening. I'd also highlight specifically, Deutsche Bank signed up as a founding member in April to the Net Zero Banking Alliance, which is an alliance of the willing, to really steer our portfolio, balance sheet portfolio, which is primarily going to be lending and facilitate emissions as a starting point, but will surely expand from there, to align it to net zero, but importantly set interim targets to look at our highest carbon emitting sectors to start aligning that towards net zero with interim targets at 2030, which we're going to have to set by the end of next year. And so I think, to Jeremy's point, we can only get to those targets if our clients get to them themselves. If we are lending to a company and on a going forward basis, they are not also heading in the same direction. And steel is definitely one of those industries which is in a hard to abate sector. So unless they have the technologies that enable them to reduce their carbon footprint, utilize more or less carbon intensive energy sources, then we will be forced to de-risk, i.e. not lend to them anymore, which is really not where we want to be at. And I can say I don't think any of our peers would want to be that in that position either. So we are very much engaged in a dialogue with supply chain providers, with providers of technology and research, and everything else that goes into this fourth industrial revolution that's going to happen to shift the economy to a decarbonized economy. So one part of it is the capital markets and access to finance in green and social, which is directly use of proceeds to green. Another part is the sustainability linked bond market, which directs the companies in transition to set targets, etc. But as Jeremy said, there are a number of clients, especially as you go down the supply chain to clients who may be subsidiaries of big multinationals who don't fund themselves, or maybe mid caps or small caps that don't access the financing in the same way that the big multinational corporations do. And so, everybody needs FX. I mean, I don't think there's any client that's not exposed to FX. So when we started down this path, it was very much with a view that we can actually make a difference by engaging with those clients who don't necessarily, have an easy way to understand market trends, know what is relevant as a KPI, how to develop a framework, and really help in that path. So that's been our approach.
So in fact, it's about providing those companies with obviously an incentive through the structure, but that isn't linked to the provision of capital. But also, do I understand, Claire, there's an element then of providing advice around some rigor, around some KPIs that then become usable, right, for the company as well, because you need rigor around the KPI to be able to structure a product around it.
Yeah, I mean, when we started this journey with Primetal and a number of other clients, there was no industry guidance. Actually, now we've been active with ISDA since the beginning of this year to actually put some framework around sustainability linked derivatives, and they've published a guidance now for the industry around that. But I think before that, we very much looked at what ICMA has published, what the LMA has published in terms of how to go about being ambitious in the development of that KPI. So we looked at those industry guidance, and we also looked at what was happening in the market. Looking at different industries, different companies in different industry sectors that have issued bonds, issued loans. What KPIs are they setting? How are they setting their targets? How ambitious is it relative to the scope of the company? And trying and import that knowledge base into the discussions that we're having with our clients on the FX side.
Great. So maybe if we can at that point then make the link back to Jeremy, do you want to just talk a little bit more about the KPIs that you're using? And then we'll get into the FX linkage, but just the KPIs that you defined, because you mentioned initially you didn't have them, and obviously your situation, just that people understand, your situation is different than Fabio's, right? Because your footprint is more about your customer's footprint, whereas with NL, it's really their own production. So as you said, as a result, a bit more complex for you in some ways.
Exactly. As such, we're engineers, so this is not really the emission. We're not the one, let's say, polluting directly, but we provide potentially the technology that would. So at the end of the day, we have our share of responsibility on what the market does. So we're here to just, as well support the transitioning, because steel makers at the end of the day, they implement the technology that's made available to them, and we try, of course, to provide technology that's more energy efficient, but as well we can provide technology that is more sustainable, that's used by products in a better way. So from the KPI perspective, we had them before, but we had to be a lot more careful this time in the program to make them more measurable. So we cannot really say that a specific kind of plant or reusage of gas recycling would improve by that much the exposure. We had to really go to the bottom of it and see how things actually, how this makes sense as well on an overall basis, and in terms of how much of these products we sell globally. So we have in total, let's say, 5 KPIs that we developed together with an external consulting firm, or that is actually auditing us on this framework to see what actually makes sense from their perspective. And we did split these KPIs between what's product relevant. So product relevant, let's say, how much of our order intake is ESG related, and how much of that order intake is sustainable. So we had to, flag each of our technology. This is, more than 4,000 products, to see, to what extent does it correspond to our definition of what is green in this case. The second part of these KPIs is really our R&D spending. How much R&D are we spending on the same technologies to develop these markets? On the other side, not linked to these ESG KPIs, we have other KPIs internally on the sales side, on how much of that R&D is leading to sales and to our hit ratios at the end of the day, and other KPIs that are linked to our social governance, what kind of employer we want to be, what kind of standard we want to follow, and making sure that most of the standard as well elements related to accident frequency rate, for example, is a lot lower than industry standards as published. So these are really the KPIs that we've developed. And every year we provide the results on a percentage basis based on the target. So we set a target once a year for each of these KPI, and at the end of the day, the average is what we present to the external auditor that the bank has engaged, and this is based on this result that the bank as well decide how to deal with our scheme when doing the review.
So the certification on those KPIs is done by then a third-party auditor, then, that is the one that's appointed by the bank, effectively. Is that correct?
Exactly. Okay. So the bank has basically chosen the auditor in this case. Yeah.
Okay, and so they're providing comfort to the bank, in fact, in this context. So,
yes,
or is
in
it also
ways.
That's provided externally? Is that, do you also report on these KPIs externally?
No, not externally on this one, again, because we're part of a larger group, so we're not always allowed to disclose some of the financials of the R&D partnerships that we have, and as well, it's an item that brought a bit more security to us when entering into this sort of scheme with the bank, saying, okay, actually, we're not delivering any data to the bank. We're delivering this to a professional auditing firm who will look into that and make an assessment of what we want to achieve, and we don't have to share information directly with the bank, which we otherwise would not share. We would not want to share with the bank the details of all our 400 R&D projects and with whom we're partnering. And so this sort of topic, this has brought a little bit of security as well for our top management to decide, let's go for that program.
And so I understand then, I mean, we'll come on to the mechanics of how the ESG-linked FX works, but I understand in your case then it's a kind of an average of those KPIs that you're using. Is that fair? Is that correct?
Exactly. So in general, the way it works, I mean, I'll just take very simply the example of a trade we do with the bank. So for us, it's based on our FX option. So since we've implemented the scheme, it's so let's say competitive that all our options are linked to our ESG criteria or KPI results. We do a trade usually in options because there is volatility in an option pricing. The bank has a lot more flexibility to give an interesting price compared to a forward trade, where, as you say yourself, competition is very hard. So a bank would struggle on a euro dollar 6 months forward to give you, 1 pip down for an ESG product, they would really struggle. So it's from a business case perspective, it was less interesting, while on an option, it really makes a difference. And we see that every time we ask all banks to quote for an option. So let's say we ask for this option, we see the rates, we say, okay, yes, let's trade this option with a, let's say, more competitive rate, if I can say it like that. But as part of this trade, we will have a payment amount obligation, which say, okay, when this trade matures or at the end of the year, we look at your results, and if you're not reaching 100% of your target in average, then this payment obligation will be due to NGO that we co-selected with the bank. This is basically how the scheme works. So all the trades that we do have a payment obligation, which at the end of which on our side we simply book as a provision, and at the end of the year, once we go through the audit, once the audit sends their reports to the bank sends us a message saying it's fine, you release from this payment amount obligation because you've successfully passed the audits with 110%. So here you go. If we would not, then the bank would tell us, please, within 5 days, pay this payment amount obligation to the NGO that we've selected together. This is pretty much how the scheme is working.
And so that payment obligation then crystallizes across the portfolio of products with that banking partner. Is that correct? It's not.
Exactly,
you don't have to do it.
Exactly.
It's not kind of per transaction. It's across the portfolio. I mean,
yeah, at the end of the day,
yeah,
of course, it ties up exactly. The calculation is per transaction. I mean, when you go through, I mean, FX is moving all the time. I'm not, it's nothing new. And when you want to link your trading to ESG, you don't want to spend an hour more than you would do on any other trade. You want the flow to continue, knowing that somehow you have this scheme aside. So this is as well one of the requirements on our side. We wanted to make sure, okay, whatever we're doing, we don't want to, we provide similar to, as I'm using Fabio's expression, FX as a service to our business. So we have to trade the risk when it comes, and we have to make sure this is smooth and as much as possible straight through. So on our side, we want to make sure we can trade. The rate's interesting. Then we have a payment amount obligation on the side. We sum this up, we book it as a provision, and at the end of the year, we go through the audit and we decide together with the bank whether we keep this benefit or not. So it's very simple. It doesn't have any operational impact on the way we're performing our FX trades on a day-to-day basis. And I think this was the most important because, otherwise, if you trade a forward and you need to wait 10 minutes to get your basis point down, the FX rate, the market has moved more than what you're getting from the bank as a benefit.
So it's very admin light. That's what you're saying, right? It's
exactly. I think
light.
From a bank perspective, exactly. It's really. I mean, I spend a lot more time doing the ESG audits, believe me, than I do spending on the trading. Yeah, and that's good actually.
Great, very good, Jeremy. Very clear. That's super helpful. So Fabio, do you want to go ahead and tell us a little bit more along the similar lines about the mechanics of yours and maybe compare and contrast?
Yes, we try to simplify our structure, being focused on the flowing activity on a daily basis. So the FX activity with tenor till 1 year, no more than this. For example, we qualify with reference to 2021 the link with the capability of the group to reach at the end of this year the renewable installed capacity of 55%. So means that we'll utilize the full notional amount of our derivatives with banks that already signed this kind of agreement as a notional. After the approval, the formal approval of the release of the end of 2021 figures officially after the approval of the general shareholder meeting, more or less in May. We'll have all the details in order to formalize if we will be capable to reach our KPI, and if we'll deliver, in that case, we'll have an additional flow, a total distinguished amount additionally that will recognize as a premium for our commitment and our delivery. Considering that doesn't exist in this moment a real protocol on this, but only a guideline, we qualify this agreement as a supplement, an ISDA supplement, in order of structure and to qualify something that could be also acceptable for our counterparty. We are now renewing this agreement in order to be ready at the starting of 2022 to have a new year available for a new exercise with the new target that is already qualified and defined for 2022. And we can do it on a rolling basis also for the future.
So Fabio, did I understand that, and I'm not sure if I understood this correctly, that in your case, it's if you reach the target, then it's a premium that you receive? Is
Yes.
that correct? Comparing to Jeremy's, which is structured the other way around, right? It's an obligation that you
Yes,
pay if you don't reach the target. Yeah, okay.
Yes, absolutely, absolutely.
Claire, those are quite different. Do you want to comment from a, you know, how when you structure these products? I mean, I imagine there are many different ways that these mechanics could work. Are there sort of common themes that emerge that are maybe worth sharing with the audience?
Look, I think there's broad themes. I think the structure of the KPIs and the targets have to have integrity, right? So I think that's the starting point for all of this. And I'm happy to hear Jeremy saying that he's spending most of his time on the sustainability work, which is actually what this is all about. You know, I think like any financial product, it needs to be tailored to the client situation and what the client is using it for. So, you know, options was chosen in one situation sounds like Fabio's is more linked to, you know, the overall FX within that particular year. We've looked at other transactions where it actually is looking at forwards, but in that case, it's you know, specific emerging market currency. So, you know, I think it can be applied to different types of products. The basic of, you know, the penalty rebate structure. I mean, there has to be an economic incentive and there has to be an economic penalty. How it's structured, whether it's, you know, day one versus, you know, at the maturity of the trade, it's you know, that's really up to the client situation and what the bank can offer as well.
And probably more linked also to how they go about then measuring and certifying the KPI. And when that happens, you know, Fabio, you were sharing about the timeline, and I understand that for you, Fabio, I guess it's the external auditors who are auditing the accounts, who are also the ones then that certify the KPIs.
It's dependent because we have an official framework that define the umbrella definition and approach for capital market tools and data of our exercise. We are harmonizing everything in this framework in the following update, but for what is already included, there is also an external definition and external check for what are, let me say, as a preliminary exercise, as first year exercise, is something that is shared with the counterparty that is sufficient the official external auditors qualification of our figures.
Yeah,
we will harmonize in the same way in the future. Let me say, if I could, considering that we don't have too much time, that we would like to share with the colleagues that are listening us, that we consider the effects and the other exercise in treasury as the easier exercise for them if they would like to approach the sustainability linked world. I'm saying this because with the help of Deutsche or other banks that consider this as a part also of their strategy, that is for sure the right approach to enter and to explore this activity, because the capital market is absolutely more important is absolutely relevant, but need to qualify a longer exercise in terms of preparation, and also the volatility of the answer and the perception of the investors. Contrary, if you start to make your experience with the dialogue, with the direct and a relationship dialogue with the banks, you can better develop your experience and create the first step in the right direction. When the company approach, the company strategy will be sufficient strong for other step, maybe could be the case to approach also capital market. That is absolutely relevant for every one of us.
Very clear. So you're,
I'll just jump in
Claire,
very quickly and
go on,
echo
Claire,
that.
go on.
I'll echo that, because I think for a lot of companies, they don't know what investors want, and it's a real learning journey. And it is a real iterative process back and forth to make sure it is what the company needs. It's ambitious enough, and we iterate back and forth, with the help, Jeremy mentioned external consultant. We also have our group sustainability team that works very closely with us. And it is, I agree, I think it's very helpful to start on your journey with something like this.
So although it's a newer set of products than the ESG-linked bonds or the green bonds, it's for those who haven't already started. You're both saying it's a good place to start. So maybe as we draw this to a close, and we only have 3 minutes, so I'm going to ask you to be quite quick in your answers. I'm going to give you a choice, each of you, and Claire, I'm going to start with you, between two questions. You can choose which one of the two you want to answer. So is there anything in our discussion, my first question, is there anything in our discussion about the treasurer's role in ESG that we haven't talked about? And obviously there's a lot that we haven't talked about that you particularly want to bring out. Or alternative question, what's your closing piece of advice for the treasurers who are listening, who want to embark on ESG linking their FX programs or their hedging programs? Claire, your choice of either question.
I mean, I can answer both of them together. I think I sort of gave my remarks. I think the treasurers definitely have a central role. I think sustainability applies to every single organization out there, and every single organization has FX. So I think starting the journey with sustainability linked derivatives is a great place to start. And feel free to call us and contact us. We have, breadth of experience in the space, and we're very happy to engage with anyone on the call and others. Thank you.
Brilliant. Thanks, Claire. Fabio?
Yeah, try to join the two questions. I could understand that it's better for everyone to try to approach this world, as we said, through treasury tools. That's the correct way, and that's the correct way also with the help of the banks, because the banks that already provide their commitment also on sustainability could be the right partner to have perception, description, and feedback of the market. So the combination of the two could be the right approach for the sustainable link exercise, and also for the transition of the financial market in this way.
Perfect. Jeremy?
So second answer for me, I think it's interesting for the people who listen to hear why we got, or why companies, like ours went into this. And illustrate the math and the business case. Yes, it's interesting. But what satisfied me the most actually in going into this ESG-linked derivative, and now we extend it to bank guarantees, to supply chain finance, is that we internally work as well a little better, because treasury or corporate finance, we work sometimes a bit in a silo in our organization. We trade, we finance, so everyone can get on with their job. And people come to me because they need something. They don't really particularly want to work to work with me, but they need my authorization for something. But this time, when doing this bottom up, I was the one needing the rest, the engineers, the supply chain, our different health and safety colleagues, and somehow by showing that I'm interested in what they're passionate about as well, we've improved a lot internally how we communicate and how we work. And I think this internal enhancement, despite the interest in going for that, because we're not linked to direct investors externally, just doing it internally, I think was really worth the journey for me.
Fantastic. That's a brilliant place to conclude. So great opportunity to raise the Treasury brand on such an important and such a strategic topic. Brilliant, thank you. So look, before I close and thank our panelists, maybe I just want to remind you of the next webinar. If you've enjoyed this one, the next one will be on payment fraud, and that's on the 16th of December. And if you want to find out more or you want to register for that, you can do that through hashtag Global Treasury Leaders, or on LinkedIn, or via the website, or through the link that you've used earlier on. So just to tell you that, and with that, I will just close by thanking our panelists, thanking all of you who've listened. Hope you've enjoyed the webinar. Many thanks to Claire, to Fabio, and to Jeremy for taking us through this really, really interesting and relatively new topic. Thanks very much, and enjoy the rest of your day, week, and stay safe. Thanks, everyone.
Thank you. Thanks a lot. Thank you.
Bye.
And on behalf of the economists, thank you very much, Sebastian, for moderating so expertly.
It's a pleasure, Marielle, as always.
Bye-bye. Thank you.